Welcome to Prebell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. With this disclaimer, we'll start this podcast. First and foremost step is important is looking into Nifty's price volume action and also to gauge the market, how the market is placed with respect to the benchmark index. For the last prior to yesterday's session, we had seen the two back-to-back distribution days, Nifty falling 0.2% or more on volume higher than the previous session. So we had considered both the sessions as distribution days. Currently, distribution day count is at 4. But yesterday's session was a relief for the investors and for the cash methodology participants as well, because Nifty closed in the top half of the trading range and it closed on above average volumes as well. So pretty much a relief session, one can say. It is trading very close to the all-time highs as well, 1 or 2% in that range. So there is no major selling happening in the markets. We have seen 1 or 2 sessions of sharp selling, but those selling has been bought into by the investors, followed by very good amount of investments. So on the Nifty front, there is no major selling as such. So there is only the distribution day count is at 4, but other than that, we have not seen any major off highs or Nifty breaching key moving averages. That has not happened. So we can say confident, stay invested into the markets, and you can stay bullish in the current market. The reason for which I'm saying to stay bullish is not just with the Nifty index. If you look at the broader market indices, both the mid cap and small cap indices, yesterday they have closed at the new all-time highs, and they are showing more outperformance when compared to the Nifty. So overall, the sectoral indices also, yesterday we talked in our stock durbar as well. All the sectoral indices are also doing pretty much good, and most all of them are in rally. So the current rally is a broad-based rally, and it is not a focused or concentrated rally, which we observed previously. And coming to methodology wise, we are in confirmed uptrend, and if the distribution day count increases to 6 or 7, we might change the market status to under pressure. And talking about model portfolio, we have adequate number of stocks in portfolio already. So if we see any strong breakout or any alternative buy point, given that parameters are looking very good, then we might consider for addition. And among the portfolio stocks, if there is any stock moving sideways or breaching key moving averages, we will exit those stocks and look for fresh additions to the portfolio. And this 21 DMA is going to be a very crucial level for the index. Once this level is breached, we have very 50 DMA is very far from here, so there is no major support for the index. So that breach might trigger further selling, but given the situations and overall economy wise, that might not happen. But we never know what can happen in the market. So just for the sake of cautiousness, I'm telling that if there is any breach of 21 DMA, you can start trimming your positions. For the key news section, we have a few stocks which are in the news. First is Grasim Industries. The board of directors have approved the proposals to raise almost 4,000 crores of rupees, and the board has set issue price at 1,800 rupees per share. And this rights issue will open from January 17th to 29th of January. And for the last 2 to 3 sessions, we have seen companies, especially banking companies, coming up with their few numbers, or you can say quarterly update for the December quarter. And similarly, RBL Bank has come up with the update for the December quarter. The deposits for the quarter have increased 13% year-on-year basis to 92,000 crores. On the gross advances front, the growth was 20% year-on-year basis to 81,000 crores. Within the advances, the retail advances have seen good amount of growth at 32%. Utkarsh Small Finance Bank has also come up with their update for the December quarter. Gross loan portfolio has increased 31% to 16,000 crores, whereas the total deposits grown 17% to 15,000 crores of rupees. Lupin has received an tentative approval from US FDA for its ANDA drug, abbreviated new drug application, and to market a tablets from AstraZeneca AB as well. So these few companies are among the news, and there are other companies which are in the news, but we might feel there might be some volatile action among these stocks in the today's trading session. Talking about institutional activity, yesterday foreign institutional investors were net buyers of Indian equities. On the net basis, they have bought more than 1,500 crores of Indian equities, whereas the domestic institutional investors were net sellers in the Indian market. They have sold nearly 1,400 crores of Indian equities. For the global update, US market closed predominantly on the lower side. Dow Jones flat, S&P and Nasdaq on the negative territory. Asia markets are trading mixed on the relatively flat to positive territory. So there is no major cues from the global update. So we might see a flat opening for the index as well, for the Nifty index. GIFT Nifty is also indicating the same, around 21,750, 770 level is the expected level according to GIFT Nifty. So 100-point higher opening is expected on the Nifty index, but if that higher, the point is if that 100-point higher opening is sustained, then we might see a new high making in the index in the today's market. But if that high is sold into, then we might see some further consolidation or a small selling happening in the markets. Or we can say it's a more of a profit booking session rather than a selling session. For the chart of the day, we picked ITI. Currently, it is trading in the very near to its ideal buy range. Most of the ratings are very good, except for its EPS rating of 18. The technical ratings are very strong at 97, 95 of RS rating, indicating very strong outperformance. A by D rating is also at the highest level, that is A plus. Number of funds wise, also it is the company has been able to see good improvement in the number of funds section as well. Only concern is its EPS has been negative for the last 4 quarters. That is the reason EPS rating is beaten down. But if the company comes up with very good numbers, that is what I think is expected, and that is the reason of this sharp rally as well. So if that is happens, definitely we see improvement in the EPS rating and stock further rallying from here. We are not advising at this moment to buy this stock, but if you already have this stock in your portfolio, you can keep a stop loss near its 50 DMA as a stop loss, and you can continue to hold it. But there is one few concern as well regarding the price volume action. For the last 2 weeks, the stock has been closing in the lower half of the trading range, which is not a positive sign. Thanks for joining today's pre-bill. Have a good trading session.